Hey guys, Joel Frank here, market analyst for YouTrading, and today we're taking a quick look at spot gold. Because spot gold in the last couple of days has actually broken out to its highest levels in quite a few weeks. I mean, actually a couple of months. Let's just take a look at the chart here. I've got gold on 4-hour candlesticks here. I've got it zoomed out just to give you a bit of perspective as to where we are. Real yields across developed markets have been plummeting since last week. Okay, we had the Fed, the ECB, the Bank of England. Generally, the tone of all those central banks was more dovish, pushing back against the prospect of rate hikes in 2022, or just the pace of rate hikes to come. So we've seen real yields falling, and obviously gold loves it when real yields fall because that reduces the opportunity cost of holding gold, which obviously makes it more appealing. So we've had this move above the 1800 level, above these key areas of resistance here that you can see from the back end of October. And now we're moving to test a key area of resistance that hasn't been broken above since, we have to go all the way back to June. We haven't been above this, the 1830s since all the way back in June. So if I just sort of zoom in a bit and delete that arrow, you can see we've been gradually edging higher since breaking above. We found a bit of support there at that previous high, gradually moving higher. If we do see real yields continue to drop, and as long as the dollar doesn't pick up too much, well, then there's a good chance that gold this time is going to be able to break above this key area resistance. If it did, then we have to go all the way back. You can see there's this low here from the 14th of June at 1843. Then just above that, you got sort of the 1850 area, 1855. That's been some support in the past, now turned resistance. So those are the most immediate levels if we see the dollar and yields continue to fall. But that's a big if, guys. We've just had producer price inflation data for the US released now. Producer price inflation remains very, very much elevated in the US. And we've got consumer price inflation data out tomorrow. If that inflation data is very, very hot, which it probably is going to remain very, very elevated, then the odds, in my opinion, that the Fed is going to turn more hawkish next year is probably going to be pretty high. That's going to probably keep the dollar supported. It might push real yields up from their recent lows, and that's not going to be a good recipe for gold. We could see gold retrace back towards the this support around this level, and then the 1800 level further down here. But anyway, guys, hope you enjoyed the video, and I'll see you all in the next one.